Hello, and welcome to the BlockSolid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the entrepreneurs, the investors, can benefit from it all. I'm so excited today to present our investor and legendary VC, Tim Draper. Hi, Tim. How are you?
Hey, Yael. How are you? Good to be on your show.
Thank you so much for coming. I am so excited because both of us are into the fractional real estate investment beyond many other things that we have in common, which you probably don't know, but I read or rather listened to your book and followed your shows through the years. So we have quite a few things that I'm curious about.
I probably should have written the book more for people to listen to it because I think more people have listened than read it. But the woman has a nice voice, doesn't she, that reads the book? I was thinking of doing it myself, but I think I'd do a horrible job. But so anyway, a woman read The Startup Hero and she did a beautiful job.
She did a great job. Yeah, it was a pleasure to hear. And specifically, why don't we just dive into one of the things from the book, Tim? Of course, it discusses your journey, through different phases of your life. But one thing that stood out for me was your bucket list. And I immediately I love making lists and plans and things like that. Immediately jumped into making like 100 bullet item on my list. Has something changed since 2017? Have you added more items or have you succeeded to do, some of those 100?
Yeah, it's fun to have a bucket list because if you're close to one, it takes you off the track a little bit. And then when you do it, when you accomplish one, you feel like, oh, good, I've done that. And then you come back to whatever your track is in the world. And you're better at it because you've tried something outside of your area of expertise. And yeah, let's see. I've recently marked one off and I'm trying to remember what it was. I haven't walked on the moon yet. I know that. And I haven't written my fiction book. I've written my nonfiction book, but not my fiction book. And I got encouraged to write another nonfiction book, and it sort of took me off the track for the fiction book. I have really enjoyed doing all those things. They really do. Oh, I am now at 49 of the 50 states. So I have spent a night in 49 of the 50 states. And one of the things that was on my bucket list was to do business in 4 countries. Turns out I've done business in about 60 countries.
Wow.
So you do a little, you put something down and you can overachieve it. And that's a great thing. So I've really enjoyed having that bucket list. And it really does. Every once in a while, I refer back to it. I never change it. Although I did get a buy on one. I have a friend who I wrote the bucket list with. And I got a buy because I had tickets and backstage passes, Michael Jackson concert in London, and he died the weekend before he was supposed to be on stage.
Wow.
I was supposed to meet Michael Jackson. That was on my bucket list, and it just never happened.
Yeah, that kind of.
So there you go. Sometimes a bucket list needs to be adjusted a little bit, but I've kind of kept it the way it is. And I next week am going to run up the Empire State Building. So that's another check mark for me. So yeah, bucket list.
Okay.
I tried to do it tried to do it last year because they only have the run up one time a year.
How many stairs is that?
But I was walking in and my wife said, "Oh my God, the dog got sprayed by a skunk." And I looked at her and I said, "Uh-oh." I realized I had COVID, and so I couldn't go. And so I wasn't able to go to New York to run up the Empire State Building. But this year, I'm going, and I am healthy, so ready to rock and roll. I was healthy then, too, but
yeah. How many stairs is that? I've done the Israeli version of the Empire State Building, the Azrieli Center in Tel Aviv. It was 1,144 stairs. How
Yeah,
many
I think this is 1,600 steps, something like that.
Okay, not too bad, not too bad.
So it's a lot. And I am at least 1 year worse off. So I'm going to have, it'll be a challenge for me.
It's going to be good.
That's what they're supposed to be, though. These
Yeah.
bucket list items, they're supposed to be a challenge.
Absolutely. Well, I have faith, Tim. I'm sure you'll rock and roll, and I'll see you right after, right? I'll see you at the LA Blockchain Summit on the 20th.
Yeah, that's right. We'll be back in, back in LA for that.
Yeah, back in LA. So that's organized by Draper Home, which is one of your funds. You are invested across different industries, heavily in blockchain and crypto, which is a great thing for us because we are in the Web3 space. And you also have a generalist fund, the Draper Associates. How do you decide where to put capital?
Oh, well, I only manage Draper Associates. The rest of them are a part of the Draper Venture Network. And we have 22 relationships. They cover about 60 cities. And there are probably about 60 different funds that are all a part of the Draper Venture Network. And we get together with all of them and discuss best practices and brainstorm. And I've been pretty active with the Draper Home team because that's all about crypto. And I think that our future has a lot to do with how we accept crypto, Bitcoin, smart contracts, the decentralized world. I think they're going to make a big impact on us.
Yeah. How is that?
Well, I think that the world's about to go through an anthropological leap. We used to be geographically limited, and our governments were all set up geographically as monopolies, and each government would tell the people of the land, what the rules of the land were. Well, that still kind of happens, but now people, if they don't like what their government's doing, they can see what the other government's doing and they can move. And so governments have to be accountable to their people for the first time ever.
The government is a servant, right?
And so government is a service, and it should be. And we're all going to be better off because of it. And it's going to be, some governments are going to take to this a lot faster and better than others are. And I think that having a currency that's outside of governments, like Bitcoin, is going to really help us understand how important it is to have a global economy, one that's somewhat borderless above the geographic borders. And I think that can be 80% of the global economy, and then the rest can be sort of tied to these artificial countries. I think we're about to go through this, and you can see what happens whenever there's going to be a big change like that. There are two types of leaders. There are the ones that are trying to cling to power, and they're putting up borders, and they're creating trade wars and barriers and
Invading other countries.
Locking people down or invading other countries. And then there are the ones that are saying, this may be our big opportunity for our people.
Yep.
And those are the ones like El Salvador who say Bitcoin's a national currency, and now the Central African Republic has followed suit. Bitcoin's their national currency.
Yeah.
Ukraine has followed suit. They did it sort of in an act of desperation, but they realized that could be a great thing.
That's the only way that they're getting a lot of money in right now is donations.
Yeah. Japan made Bitcoin a national currency when China made it illegal. So all the entrepreneurs fled from China and went to Japan.
Yeah.
And all these small countries, I know that Switzerland started out with every ICO that happened was Swiss. And then they started to overregulate, and then people went to Malta and Gibraltar and other places to do their ICOs. And then the Swiss realized they were missing out on a big opportunity, and then they lightened up their regulation. So that was a great example of a country realizing that they're in competition and realizing it early and making an adjustment. You're seeing, and I actually think, imagine if back in 1985, the US had said, we're going to tax the internet or we're going to make it illegal or whatever.
Mhm.
All of that internet value would have gone to another country.
Absolutely.
And the same thing might be happening now. The US has kind of overregulated, but not too badly, but they've kind of overregulated on crypto. You can't do an airdrop here. You can't do, DeFi is heavily regulated. I think smart contracts they haven't really considered yet.
Right.
You can't do a DAO because they won't allow that to happen. So I think the US is going to miss out on a lot of the great value. In fact, I was jealous. I met some of the government officials from El Salvador, and they were talking about what was going on there. And they were talking about having smart contracts and how they were paying with Bitcoin and they were paying their taxes with Bitcoin and everything was automatic and everything was taken care of and it was all on the blockchain, taxes, everything was on the blockchain. And I thought, oh my gosh, they were already 5 years ahead of the US.
Absolutely.
In their thinking. And so that can change the fortunes of people 40 years from now, 20, 40 years from now. China went from being the poorest country in the world to one of the richest just by opening up and making it a free country. And then for some reason, that leader just decided to lock it back down. And now they're going to be a poor country again.
I know, right?
Except that I hear he's under house arrest. So maybe there's hope there.
Maybe there's hope for them. Well, I see that you're quite vocal on Twitter against inflation, not against inflation, against the policies that lead to inflation, against the policies that overregulate. I saw you wrote, less regulation equals more economy, jobs, and prosperity. And we certainly agree with that. In some cases, regulation could create opportunity. So RegTech and perhaps the blue ocean as opposed to red ocean, which I feel kind of what's happening in our industry. It's not all bad, right? In the security token fractional investment industry. I'd love to jump forward to the subject of real estate and why that's such an important topic for you and why you think fractional real estate is the next big thing.
So first I'll tap on regulation there. I actually think it was the US sort of jumped on it and then they decided it was a security and that kind of messed with the whole opportunity.
Yeah.
The thing the US really needs to focus on is just work taxes into it and put all of the accounting and auditing and all that into the blockchain and make it all a Bitcoin economy or allow a Bitcoin economy because I can't wait for a time when I can raise a fund all in Bitcoin, invest it all in Bitcoin, have the employees and suppliers of the entrepreneurs be paid in Bitcoin, and then have the whole thing be in a walled garden where the investors get their money in the waterfall just the way they're supposed to. And it all happens on the blockchain, all in one big smart contract.
Do all of that on SolidBlock, by the way.
And yes, and I do the whole thing with no auditor, no accountant, no bookkeeper, no transfer agent, no lawyer, all of that. And it would save me a fortune. Yeah. And it would also save my investors a fortune and the entrepreneurs would benefit.
And everybody would incentivize the whole ecosystem to bring investors, to bring profits, to bring network, to bring proof of concept, to bring clients, and everybody will, and all the incentives attract, right? Royalties automatically combine NFTs with security tokens, that type of universe, right?
Yeah, and the US hasn't made that legal yet. So once they do, then I think we will have a whole new renaissance. That'll be really extraordinary. Yeah. Now with real estate, biggest industry. I think it's one of the three biggest industries in the world. I think there's oil, government, and real estate. I'm not sure exactly which order, but real estate's huge. And real estate is one of the industries that will be affected by the blockchain, by Bitcoin, and in a number of different ways. One is like SolidBlock tokenizing the real estate. One is like Proppy tokenizing title to real estate. We actually have another company that's thinking about tokenizing real estate in the virtual world, which is a whole different world.
The metaverse.
And it feels like this is a perfect opportunity, a perfect time to bring in the individual investor. And I think the US is always tripping over itself, keeping the individual investor out of the private markets. And I think that's to all of our detriment. Because think about it, let's say you're 25 and you're just starting out and you're thinking, I've got to own a piece of real estate. And you have, $12. You're going to want to do it. You're going to want to try it. You're going to want to put that $12 to work. And in the US, they sort of protect you from yourself there. And you can't do it until you're a millionaire. So how are you going to get to be a millionaire if you've only got $12 and you're not allowed to invest it in the private market?
Heavily from the bank, right?
Yeah, then you overextend. It's like the Catholic Church making everybody celibate, and then you find out the priests have gone off the rails. And it's the same kind of thing. That guy with $12 borrows a bunch of money, gets himself into financial trouble. And it's all because we've overregulated and we've made it so he can't invest in the private markets. So I'm hoping that we come to our senses there. But in the meantime, I love the idea that any investor can come in and buy a piece of the Empire State Building or of a house or of whatever, so that they feel great about what they feel ownership. There's this real value to ownership. It's like the difference between somebody who owns stock options in a company and somebody who just gets an hourly wage. Yeah. It's like the owner or the renter. When you own a house, you take good care of that house. If you rent a house, maybe you do, maybe you don't. You do if you think you're going to rent it again, but you don't if you think this is, one and out. And I think people take care of their businesses that way. If they're owners, they do more to help it. So if you have multiple owners of a piece of real estate, there are going to be a lot of people going over and picking up the cigarette butts and cleaning the floors and doing whatever it takes to make sure that real estate is more and more valuable and that people want to rent it. And I like that economy. I like what that could do for the world. And so whenever I invest, I like to think, what if it works? And is that a world I want to live in? And in the case of Solid Block, absolutely. That's a world I want to live in. I want everybody to be able to invest in real estate. I want them to, here in the Silicon Valley, for, regulation reasons, we have artificially high-priced houses. And so people rent and they can't afford to buy a house, but they could afford to buy a house in Iowa. And so that's kind of a fun thing. You could rent here and buy a house in Iowa. Yeah. And then you feel like I'm an owner, but I'm also a renter. Absolutely. I think that real estate, this could really have a huge impact on real estate. And ownership and the rent and the management of a piece of real estate can all be somewhat separated and tokenized. And I think that can make for a really interesting marketplace where we get better and better service at the in the real estate. We get more and more people can participate in the growth of the value of real estate. They can get the coupon, they can get rental income. There are a lot of great things here for investing in real estate. There are a lot of great things that can happen, and they can only happen for millionaires in the US. So hopefully we can get some of that changed.
Absolutely. And I feel also that the blockchain aspect of tradability of these contracts, right? In general, what is fractional real estate? Is ability to get into a contract with a real estate owner that doesn't assume that I'm buying the whole asset. Like my contract as a fractional real estate investor is me buying a piece of the property, usually not having a lot of governance rights, although that might change, right, with the DAOs. So me being able to buy that contract is still limiting me as a small investor because I'm worried, right? I don't have any rights to sell that contract usually, right, to someone else. I don't have any rights to exit. Whereas in the blockchain world, in the peer-to-peer transactional world, I can sell that contract to someone else. And blockchain will track where that contract went, will make sure that there is a compliance and that you undergo, and also that the dividends or interest or reports and accounting go to the right type of person, or as we start thinking about it, the right wallet, right? We're not thinking about people anymore, really.
And who's the owner? Like, I mean, if it were a piece of a house that Arnold Schwarzenegger used to own, or Taylor Swift was a previous fractional owner of this building, and that then has some value that's even beyond the trading value. You could do some really interesting things with this.
I agree.
I think you're going to have a lot of fun.
Yeah, we are having a lot of fun, especially as our industry is moving towards more of a financial revolution. Blockchain allowed many industries to develop, right? From crypto, kind of you got very early into crypto, right? You were the Bitcoin investors. And then, that evolution from the crypto asset class went into things like stable coins. And now there is the government stable coins that are kind of controversial. And then there's DeFi industry, the decentralized finance, the new types of banks that lend, whether or not, they go by risk management, traditional risk management or not, the things are still improving. And at the same time, with fractional investment, you can trade, you can leverage your fractional investment as you can leverage your home ownership. That's the new phase that we see happening a lot. And I saw that you posted something about MakerDAO recently, and one of your startups, I think Coinbase, doing interesting things with USDC. So a lot of happening in that industry, the leverage and lending as a base of stable coins or base of other assets, and then combining these investments into aggregate products, structured products, indices. And like you said, Taylor Swift or other types of celebrities owning piece of assets, it's kind of like a quality stamp, right? So we call that underwriting. We would invite Taylor Swift to come and underwrite this asset, right? Kind of give it a quality assurance stamp, right? So still a lot to go. We're just at the very beginning.
It's great. Yeah, I've always thought that the stable coins were just a bridge to Bitcoin, which they kind of are. And the reason I kind of like MakerDAO in that field is that as opposed to Luna Terra thing, it dilutes when Ethereum drops in value, but it goes infinitely. So you will never have a crash the way you did with Terra Luna. So I like the way they've created it. It has they can infinitely print Maker if the Dow starts dropping below $1. So I think it's a good model, and it will stabilize that. And that the problem with those currencies is that they're still tied to a government.
Yeah.
If it's tied to a dollar, it's tied to a government, and governments can print money, and they can inflate your money, and your money is worth less and less and less over time. And that's happened throughout the ages, because governments decide they just want to print more money, and then you have to put up with it, and the money you have is worth less. That is not true in the case of Bitcoin.
Absolutely. So tell us more about Bitcoin. I mean, everybody knows what Bitcoin is by now, I hope, but we're watching kind of this liquidity crisis in the market in general, right? All the stock markets are down, all the asset classes are down, except, a few like oil perhaps, and maybe arms at this point in time.
Yeah.
Where is Bitcoin always going to be tied now forever to the rest of the asset classes that are impacted by institutional liquidity? Or do you think there is going to be a time when there will be kind of this decoupling of Bitcoin from traditional asset classes?
Yeah, I think I think we're going to see a decoupling at some point, because there's sort of two kinds of investors, two buyers of Bitcoin. One is the group that just sees a better future, and they just say, hey, this is better. It's decentralized, it's open, it's not tied to any government, it's not a political coin. It has, no central figure can ever print more. it's everything you'd hope for in a token or in a currency. And I think those are the people that are going to just stay with it. And if it drops, they buy some more. The ones who speculated on it will also be the ones who are the ones who sell it on the way down. And so they're the same ones who speculated on the tech companies, and they're now selling them on the way down. Eventually, what will happen is in the tech company world, maybe they have some people who are the equivalent of hodlers, but the hodlers in Bitcoin will, see open like this is an opportunity to buy in, and slowly but surely they'll start buying back in. And then there will be more demand than supply, and it'll just rocket back up the way it's rocketed down because there was more supply than demand. And Bitcoin, it is a limited supply, so load up the boat. Yeah, the other thing is that if the interest rates go up, what that means is that's artificially that the Fed is trying to lick its wounds from printing so much money before. And what that does is it says, well, my risk-free rate's up to like 5% now. So the PE ratio, that equivalents to a PE ratio of like 20. When it was at 1, that was a PE ratio of 100. So that would argue that the Fed moving the rate up would drop the stocks from 100 down to 20.
Wow.
And when the stocks are falling, people are poorer and they have less money to put into Bitcoin and other things. And so there will be for a while less money to go in. But then there's this time at the end of a bear market where it's like everybody gives up and nobody wants to buy a stock ever again. I think Bitcoin will be among the first to rise. And I also think that once retailers are accepting Bitcoin because they know they can save 2%, they now pay to the banks. 2% for a retailer is a huge number. And so if they can save 2% just by accepting Bitcoin, that's a big deal. And when people can buy their food, clothing, and shelter all in Bitcoin, they're not going to need fiat money. And there will be a run on the fiat bank. That is my prediction. Run on the fiat bank. And it's coming. It's just when. Now, when I was buying a house, the owner figured out who I was, and they say, well, we'll take Bitcoin. And so there's shelter. The Kentucky Fried Chicken in Canada was the first ever retailer to accept. They had a Bitcoin bucket.
Yeah.
And so that there's food. And then clothing. Yeah, I think Zalingo accepts Bitcoin. I think you can get clothing for Bitcoin, but it's got to be pervasive. It's got to be all the retailers everywhere starting to say, all the grocery stores, everybody's got to say, yeah, we're accepting Bitcoin. Yeah. They will save 2%. And then that'll be a currency that is generally growing in value versus one that will drop in value over time. Even if they raise interest rates, there is a natural inflation that's built into all fiat currencies.
Right. There is I don't know if it's a natural inflation, right? It's an artificially induced inflation by the government.
Right. Government wants to do something, so they print money, and then the money that you have is worth less.
I loved it when last year the government went for limiting the members of Congress from trading stocks. And what you said is super interesting. You talked about a PE ratio, and I just want to kind of break that down for the listeners in case they don't know. PE is price over earnings, right? PE ratio over earnings.
Yeah, and it's a way of valuing public companies.
Yeah.
And some public companies don't have earnings, so it's hard to know what a PE doesn't make sense. But many of them do, and they're mostly valued based on what's the long-term value of the cash flows that would come in from that business. And those are always estimated based on growth rates and a number of other things. But anyway, a quick and dirty way of valuing a company is a price to earnings ratio. So if the price is 20 and the earnings, so profit per share is 1, then you have a 20 PE ratio.
Yeah. And you invested in Robinhood, right? When it was one of the
that
you made. Yeah, on the homepage, that's like one of the first things you see. And by the way, that's an example of a company that, number one, of course, revolutionized the access of just the masses, right? Like over 50% of Americans trade stocks. And the second, crypto. They found a way kind of to go around being able to trade crypto by trading instruments that follow crypto. And I thought that was super, super creative. And now I think it maybe even it's surpassing crypto trading or crypto instrument trading, blowing up on Robinhood. Right.
Oh, great. I didn't know that.
Yeah.
That's great. But boy, that is a very creative company, and they've done some extraordinary things to build that
absolutely
value. And they did bring the individual investor into the market, and everyone kind of has a Robinhood account now.
Everybody does. Coinbase as well, right?
Right. And these young people have Robinhood and Coinbase accounts, and they're getting older and richer. And the older people are dying off.
It's true. And the coolest thing is that now Coinbase and other crypto exchanges are gearing up to trade stocks. Some of them are doing it, whether or not it's 100% legit trading securities. But, why should you go to Robinhood if you can just do everything on one exchange? So I find that's really
interesting.
Yeah, really interesting.
They're all touching each other's business. Yeah. That's good.
Yeah.
The competition's good. If they all compete, we get a better service for a lower price.
Yeah, 100%. Yeah. So I wonder what the PE ratio for Bitcoin would be, because Bitcoin does have earnings. And I mean, you mentioned that the inflation has an influence on that, right? Inflation is low. Investors are willing to pay more for stocks, and obviously liquidity is higher in the market, and the opposite. And Bitcoin does have a return through, DeFi markets, being able to lock your Bitcoin or any crypto on one of the decentralized exchanges, or even centralized, like Gemini, for example, or Coinbase. You can lock Bitcoin in a wallet and get an interest rate, right? Just like you can at a bank. And that's what, 6, 7, 8%, something like that. So there is.
So I guess Bitcoin's selling at about a 17 PE ratio. That's one way to look at it. That's fun.
It's fun, isn't it? This whole So another thing that's super fun was your show. I really enjoyed Meet the Drapers. And I think that was one of the things on your bucket list, kind of a reality show, wasn't it?
Right. Well, no, I think we'd be on a television show, but I didn't realize I was going to create one. And I did it just for fun. I did it with my sister and my dad, and we were just doing it for fun. My sister's an actress. She was in 30-something and did a whole bunch of other things. And she's now a producer, writer, director. She's really quite extraordinary. Nice. And my dad, of course, has been a pioneer in venture capital, and he did the first venture philanthropy organization in the world.
And Jesse was on it. Your kids were on it, right?
And Jesse was on it, and my other kids, Adam, Billy. We haven't had Eleanor on, but we'll get her on there eventually. And we did it for fun. We didn't realize that it was going to catch on the way it did. We now have 12 million viewers, and we're expected to have 30 million viewers next season.
Wow, you're going to be the Kardashians, aren't you?
Well, we're going to pass Shark Tank.
Whoa.
Which is amazing.
Things are more fun for sure, because Shark Tank is like kind of like, I think the sharks are cool, but they're kind of like very sharky, and they're, there's one angle to it, and it's like, how do we make lots and lots of money from these people that are coming on a show? And but I love about your show is that it's cross-generational. Like you have your younger kids sitting there and giving a perspective of somebody from Gen X, Gen Z, like all the letters of the alphabet.
That's right.
Yeah.
And we have guest judges, and they're so much fun. We've had everything. Well, next season, we're going to have a cardinal from the Catholic Church. I asked him, well, so as Catholic Church, you're an arbiter of what is good and what is evil. And he goes, yes. And I said, okay, well, which of these entrepreneurs do you think is good and which ones are evil?
Oh my God. Well, no kidding. The Catholic Church is one of the largest investors out there. And in real estate too, right?
Oh, they own a lot of real estate. And then we had Joe Montana, and he, it was all about what makes a champion, and he's a big thinker. He was terrific. And we've had Vivek Ranadive, who owns the Sacramento Kings, who's been a great entrepreneur, and he came to the US with $50 and built this incredible empire. And we've had it's really been a fun, amazing thing. So I can't wait to see what the next season looks like.
Did you find?
We're doing an Olympics. Yeah. We're doing an Olympics. We're going all over the world and interviewing entrepreneurs wherever we go.
Oh, I love that. The Entrepreneur Olympics. That's pretty cool. Yeah, different. It's a sport. Even though we sit in chairs in front of a computer, generally, it's a type of a sport.
It is. It's like an e-sport.
Yeah, absolutely. Yeah. So anything fun or any company that we should be paying attention to from that show? Did you find anything really cool?
Yeah, we've got one that's a big unicorn now, and it wasn't when it was just getting started.
Which one?
And it's called Buildable. And what they do is they build houses as though they're on an assembly line.
Oh, I love those.
And he's looking at building houses the way you would build, the way Steve Jobs was looking at building an iPhone.
Wow.
It's this perfect assembly, and it fits on a truck, and then it unfolds on the land, and suddenly you have a house. Yeah, that is a big, huge deal. He's got an enormous factory. I think it's somewhere in Nevada.
Yeah.
And then we've had a number of other really interesting companies on the show. They won a little bracelet that you put on if you're blind. And I tried it. I walked around with this bracelet, and it kind of goes when you're getting too close to something. And so instead of or in addition to a cane, if you're blind, you can kind of go, you can walk around with your eyes closed.
Safer. Yeah.
And then we've done quite a few. There's something called Vivu, which is a personal health. You pee on a stick. And if you pee on the stick, then it gives you ratings, and those ratings get sent up to your phone. Mm-hmm. And then it shows, you've got not enough potassium, and you got too much sugar, and you got something else. And then they monitor you over time. And as things can get better or worse depending on what you've been doing, eating, exercising.
Impact, on these
health. And they've done very well. So so much fun. And one company got on the show, and between the time she was on the show and came to our semifinals, the show had aired, and her business went from 0 to $1 million in sales just from being on the show.
Of course.
Yeah, that was just crazy. To me, all of a sudden, I thought, oh my God. So having people on the show, it's valuable to them to be on the show. It's valuable to us. We get to see entrepreneurs. Valuable to the viewers. They can play the game. We used to have crowdfunding, but we put that off for a while to let it settle.
Yeah.
But anyway, we love the show. Thank you for asking.
No, absolutely. I love the show too. Please make more. Yeah, please make more. I love that your children are following in your footsteps too. Is that exciting, or would you rather they kind of pursue their own path? Or
well, they are fantastic. I never really guided them toward anything. They found their own way, but 3 of them ended up being venture capitalists, and one is an artist.
And it's not a dirty work, right?
Yeah, and they've done some really interesting things. My daughter Jessie is only backing women, female entrepreneurs, and that has been enormously successful in a lot of different ways. It's really woken the world up. She's really doing extraordinary things. She's down in Los Angeles.
Yeah, I think
my
not
son
only just backing women, but also businesses that are making impact in the lives of women.
Oh, that too. Yeah, she's got a new podcast that's all about family. So that's going to be fun to hear. And then Adam and Billy also have podcasts, which is fun to hear. When I go for my walks, I just listen to my kids and feel like I've been with them for an hour.
I know. It's more like you used to follow them on Instagram to know where they are, and now you follow them their podcast to know what they're investing in. That's the next level stuff.
Yeah.
That's next level stuff.
Adam has been going after DeSci, which is decentralized science. That's his new field, wow. And he sure knows how to pick them.
I know.
Done some great things with Boost.
I don't even know what that is, but we're gonna have to do. You know what? We'll ask him on a podcast to talk about DeSci. That's actually, for me, it's like, whoa! I heard something I don't know. That's crazy. And
yeah, you got to get him. You get him on a podcast. He's fun, and Billy is also really great and fun, and would be fun to have on a podcast. He worked with me for 4 years, and so he's started his own venture fund called Path Ventures, and that is doing great things too. So fun to have 3 kids in the business, and yeah, it's more deal flow for me, and it's fun for them, and I got good places to invest money, and everything's great.
I mean, it's talent, and I strongly believe that obviously both nature and nurture have to play a role here, but you specifically, Tim, have kind of number one, obviously some extra terrestrial ability to figure out what's next, right? Bitcoin ahead of time, like all the other investments, big companies kind of figuring out what the formula is, and then it becomes intuitive, right? 10,000 hours and everything, but it's also probably some business sense probably is genetic, right? Then of course they grew up with you, so I'm not surprised.
It might be genetic. I don't know. My grandfather was the first Silicon Valley venture capitalist. My dad was a pioneer in venture capital.
Yeah.
And so part of that is probably just like, hey, this is what we do in our family. But I think I'm just fortunate that I get to meet 8 new entrepreneurs a day.
Wow.
And they tell me what the future is going to look like. And so people say, oh, you've got this supernatural ability. All I do is I just listen. And then I kind of go, look, 4 of these people have told me kind of the same thing is going to happen. And I think that might just happen.
Absolutely. I mean, that's how fortune tellers operate. Like whether or not you believe that they actually have this natural ability, but they just look at people and they have great intuition, and then they can tell you.
I think that's right.
Yeah.
Yeah. My sister does a lot of fortune telling, my actress sister, and she does it for fun, but she kind of has that knack. Like she reads people and understands, and fortune tellers are thinking about the future all the time. So maybe that is a thing.
It could be. I think
it could be the same kind of thing that I get from meeting entrepreneurs. They get from meeting people who want their fortunes read.
Yeah, maybe. That's funny.
This is a fun podcast. This is the first time I've compared fortune telling to venture capital.
For sure. And maybe
it's a good way of thinking, I think.
For sure, Tim. And then this could be, maybe a subject of your new book. Maybe it's just called Fortune Telling for Venture Capitalists. Exactly. Copyright.
Something like that. Tim, yeah, right. I think great idea.
Yeah. So we have a little bit of time left. I kind of always love to ask investors that are successful 2 things. Number one is there anything that you saw and you didn't invest and you regretted later? Oh, yeah.
Oh, so many.
Yeah.
Yeah. And the 2 that I'm responsible for, I brought in, it is going to kill you. I brought in Google, and we had 6 search engines, and my partners said, no, we got 6 search engines, and Direct Hit has better technology in there. And then brought in Yahoo, and, they said I was a couple of kids. But my fault was I looked at LinkedIn and I thought, well, the people who want to meet with people, those people don't want to be met with. That was a big mistake. Everybody wants to be met with. And so I missed LinkedIn. And then I missed Netflix because I said to Reed, who I knew was a brilliant guy and a really good entrepreneur, I said, this is a business that's going to take DVDs and sell them through the US mail. What are you thinking? We're about to stream. We're like 1 year, maybe 2 years tops from streaming movies. What are you thinking? And he said, well, they're not ready for that yet. And he was absolutely right. And his execution was so good because he got the software into your hands and he got you to put your 20 best movie, your 20 favorite movies in there, or the 20 you wanted to watch. And once you've done that once, you're not going to switch. And so he really figured it out. And so I miss Netflix. And then there were a couple of others that were just when we had too many partners around the table, that was a problem. And so now I went solo and I think it works out better for me.
Gotcha. So I was going to ask you just one question, but I just got to follow up. If you weren't a VC and let's say not a fortune teller either, what would you be?
Yeah, fortune teller came right to my mind when you said that. I would be an entrepreneur. And at this stage of my life, maybe I'd be some sort of an educator because I am doing that with Draper University. We teach people how to become entrepreneurs in some strange and unusual ways. But I have a lot of interests. So I would have to do something that would keep those interests alive. I like digging deep and then pulling back and looking at the big picture and then digging deep and pulling back. So venture capital is probably right for me. I don't think I have the wherewithal to stick with one entrepreneurial company forever. There is one other thing that I would think about doing, which is I think I would create a DAO that would be a new form of governing, which is kind of a liquid democracy. I think that I might do something like that, or start something, maybe start something that's using smart contracts and building smart contracts to replace all of the contracts that there are in the world. So put it all into software so that you don't really have any real disputes anymore because it's already built into software. So I think those are going to be important things. I think I'll back other people to do them. I know that I probably wouldn't be a good person to run those companies. I'd be okay at getting them going.
Absolutely. When I started in blockchain and crypto ICO world, one of the ICOs that I led marketing for was doing Google Translate for traditional contracts into the Web3 contracts.
Oh, wow.
Yeah. So there were a lot of tech difficulties.
That is
kind of reminding me of the Theranos difficulties, kind of like, we could get it 60% right, 70% right. And eventually you get to the 100%, but nobody has the patience. People need to have patience.
I think that's right. It would be one of those things where you just have to keep improving the contracts.
Yeah. The AI and blockchain are really a marriage made in heaven, right? And in many ways.
Oh, they are. And if you could build it so that the AI actually kept improving the contracts so that you don't have to keep improving it yourself, that would be a really big deal.
Awesome. So we're out of time, unfortunately, because this was so fun and I want to have
We'll have to do it again.
We will. So thank you so much.
Fun too.